Welcome to Blockchain Tech and Finance News today. If you're on the YouTube side, please do subscribe, smash the like. We're going to go through a few pieces of news I found interesting for this past week and recently. If you're in the chat, you can feel free to chat with me. I'll answer your questions about blockchain, cryptocurrency, and technology. We'll also go through some stock technology as well and stock finance news. I'm not a financial advisor. I can't give you financial advice. Do your own research, most definitely, and take caution in all type of markets. So basically, the first piece of news I'm going to be going through here is, well, first we're going to go with the coin market cap. So top 10 cryptocurrencies I'll be going through, top 5 to 10. So via coin market cap, we got Bitcoin, number 1, $11,635, up 1.24% in the last 24 hours. Ethereum, $414.06, up 3.64%. XRP, 28 cents, 2.42%. Tether, $1, always at $1. USDT Tether. Chainlink, $17.41, up 7.83%. So you got some gains on Chainlink. Bitcoin Cash, $275.54, up 2.39%. Litecoin, $61.24, up 6.44%. Got some small gains there as well, a little over 5%. Yes, Bitcoin SV, $192.03, up 1.04%. Crypto.com coin up 2.24%. And in 10th, Binance coin, $23.28, up 0.39%. The top 5 is Chainlink, Tether, XRP, Ethereum, and Bitcoin. The first piece of news I have today is from the Forbes. So I'll have all these article links in the description on the playbacks. You can find in the Blockchain Tech and Finance News section playlist of this of KinToshi, my YouTube channel. Feds move to seize cryptocurrency accounts linked to North Korean hacker heist. The U.S. Department of Justice filed a civil forfeiture complaint Thursday against 280 cryptocurrency accounts that were allegedly used by North Korean hackers and their Chinese accomplices to steal and launder over $250 million from over a dozen virtual exchanges. The key facts: the DOJ and the Internal Revenue Service said that the North Korean hackers who U.S. officials digitally traced back to the country's intelligence bureau used malware to get access to the exchanges and steal from their user accounts before laundering the money through Chinese middlemen, according to the Wall Street Journal. In March, the U.S. indicated that and sanctioned 2 Chinese nationals for allegedly helping North Korean hackers launder around $100 million in stolen cryptocurrency. The third note: today's action publicly exposes the ongoing connections between North Korea's cyber hacking program and a Chinese cryptocurrency money laundering network, said Acting Assistant Attorney General Brian Rabbit of the Justice Department's Criminal Division. Thursday's filing was the first publicly announced case of a U.S. virtual exchange being targeted by North Korea. According to the United Nations experts and U.S. officials, North Korea uses the proceeds from cyber theft to fund its military and nuclear programs. The key background: officials say North Korea, which is barred from participating in the international finance system, uses cyber attacks to circumvent global sanctions and boost its geopolitical relevance. In July, the U.S. Army released a report highlighting North Korea's cyber attacks as a national security threat. The report estimated North Korea has a special cyber warfare unit with as many as 6,000 members positioned across the globe. On Wednesday, the Federal Bureau of Investigation, Department of Homeland Security, U.S. Treasury Department, and its U.S. Cyber Command issued a joint statement warning that hackers tied to the North Korean government were trying to drain bank accounts across the globe by hacking ATMs and setting up phony money transfers. And further reading, so there's some further reading accounts here as well. This is from the Forbes. So again, I will have this link in the description on the playback as well. Next piece of news. This is from Cointelegraph. The last article writer was from Daniel Cassidy, Forbes staff. This article writer from Cointelegraph, Michael Kapilkov. Sorry, I apologize if I butchered your last name, but Michael. Researchers re-mine Satoshi's Bitcoin blocks to discover his secrets. The article here. Sergio Dermain Lerner, a researcher known for looking at the mining patterns of the original Bitcoin BTC miner, has turned his attention to the Bitcoin blocks mined by Satoshi Nakamoto. Lerner made a review of his latest findings available to Cointelegraph. His research is based on the irregular pattern of the least significant byte LSB of the nonce field of block. This past June, Lerner published a blog that expanded on his original research from 2013. He suggested that for an unknown reason, Satoshi refrained from mining in the first 5 minutes of the block interval. Other researchers have also expanded on the Lerner's research. TechMix showed that all the blocks mined by Satoshi could be grouped into 5 baskets, based on the frequency distribution of the nonce LSB values. A nonce gets incremented with every new attempt to solve a mining puzzle. Apparently, Satoshi's equipment was not using the entire available nonce space, only focusing on a limited range. Lerner's past research indicates that Satoshi was decrementing the nonce value instead. It turned out that the remining reveals a strong tendency of this Satoshi mining algorithm to choose higher nonces when scanning the inner nonce. This tendency suggests that nonce was being decremented, which is the opposite that Satoshi client version 0.1 does. This leads to a more interesting conclusion that perhaps will put an end to the discussion about the type of equipment that Satoshi Nakamoto used. Since the nonce imbalance decreases when analyzing 2 subranges together, this suggests Satoshi was scanning 5 subranges in parallel, but each subrange internally sequentially. This contradicts the theory that Satoshi deployed the first mining farm of 50 independent computers or any other highly decoupled system, and supports the theory that Satoshi was simply multi-threading a high-end CPU. If Lerner's conclusions are correct, that would lend more credence to the hypothesis that Satoshi Nakamoto was a single person and not a team. This would also put another nail into Craig Wright's claims of being a Bitcoin creator, as he has indicated numerous times that he used dozens of computers to mine the early blocks. So that's a little information about the original origin of Satoshi Nakamoto's blocks mined of Bitcoin. More insight on the research there. So from CoinDesk, we have from CoinDesk here, from Daniel Kuhn, blockchain bites Winklevoss while production, Bitcoin miners hoard Ethereum's critical bug. So these are like 3 different articles I just sped out real fast, but these are multiple articles. So one, I'll relieve this. Mongolian authorities have put the kibosh on cheap electricity for crypto miners. Venezuela is seeing healthy crypto use for outside government-approved exchanges, and a critical bug has left 13% of Ethereum nodes useless. So we'll read one from Back. And growing institutional interest is helping drive the recent spike in volume on Bakkt, according to its president, Adam White. Trading volumes for physically settled Bitcoin futures on Bakkt rose to 134 million on Tuesday from a previous high of 132 million on July 28th. Moyayo Shen reports, physically settled means buyers receive tokens at expiration instead of cash. It's not a bet on the price of Bitcoin, White said, and it does not rely on an index price created from unregulated spot markets that are self-reporting their data. Despite the recent surge, Bakkt still lags behind CME Group, a bigger U.S. regulated exchange. Data shows the aggregated daily volume of Bitcoin futures on Bakkt and the CME were at 279 million and 1.5 billion respectively on Monday. So, client centralization. A critical bug has left 13% of Ethereum nodes useless, and it could take weeks or months to fix. Parity Ethereum and Open Ethereum versions 2.7 and later contain a bug that stops nodes from syncing with the $43 billion network's latest block. Clients are different programming language implementations of blockchain software, a way to strengthen the network by having concurrent yet separate systems running. The bug has highlighted the issue of client centralization, as Ethereum Foundation-backed Geth client now supports some 80% of the Ethereum network, CoinDesk Will Foxley reports. So here we have another part. Wild predictions. Tyler and Cameron Winklevoss, early crypto investors and founders of Gemini, believe weakness in the U.S. financial system and other factors mean Bitcoin could one day reach $500,000 per BTC coin. So one Bitcoin being $500,000. Right now, Currently, at the beginning of this, I said it was $11,300, $400 floating around there. In a post on the Winklevoss Capital blog Thursday, the two set out outlined fundamental problems with gold, oil, and the U.S. dollar as stores of value. Even before COVID-19 and despite the longest bull run in U.S. economic history, the government was spending money like a drunken sailor, cutting taxes like Crazy Eddie, and printing money like a banana republic. The brothers right. They recently met with prominent day trader Dave Portnoy and told him gold could be devalued if figures like Elon Musk begin gold mining asteroids. Yeah, anyways, that's so far-fetched. The quick bites whistle. No, I'm not gonna. Yeah. All right, I'm gonna say this last part, and we're gonna go on to the next and final article. At stake, mind hoards. Bitcoin miners are holding more bitcoins than at any point in the past 2 years. This could signal increased bullishness about future gains. CoinDesk Zach Vol said, miners are holding more than 1.82 million bitcoins, an increase in roughly 2% in the last year, according to the data from Glassnode. In fact, this is part of a larger trend, which the percentage of all inactive Bitcoin, meaning has not been traded or cashed in, hit a 4-year high last spring. Thomas Heller, former director of a leading mining pool, F2 Pool, said it was bullish. This was a bullish indicator, as it appears holders may be anticipating a higher price. To be sure, no one is clairvoyant, but we're talking about market sentiment. But there's another technical reason miners in particular may be holding. Mining factories are in a cycle of deploying newer mining machines, which is, concurrent and relevant and makes sense. This phase is in the hardware cycle, means operation expenses have decreased. Therefore, so has the number of Bitcoin sold to cover these expenses. Harry Sudak, vice president of strategy at Grid, said presumably costs would have spiked months ago when miners were ordering the machines now being deployed. As miners deploy new machines, they also enjoyed a 7% monthly revenue increase in July, according to the network data analyzed by CoinDesk, thanks to recent price appreciation and increased transaction fees. I will read this one last part, actually. Ethereum, the world's second largest cryptocurrency by market capitalization, is expected to undergo a radical system-wide upgrade to improve network scalability and efficiency by early next year. Join CoinDesk Research September 10th at 10. For a live discussion as we examine the potential market impacts of the launch, as we know, what's known as Ethereum 2.0, which we're all waiting for. Due to its sheer complexity, Ethereum 2.0 will be rolled out in several phases, starting with phase 0. Don't miss the opportunity to understand the risks, benefits, and predictions of the next phase of this technology. So Ethereum is going to be scaling to Ethereum 2.0. I've heard different things from late this year to early next year. Q4 this year, Q1 next year, and rolled out in several sessions. So that's from CoinDesk article, and here's the last article from the Motley Fool. Better buy Micron Technology versus Intel. Both giants are out of favor right now. Which is the better candidate for a rebound? This is from Billy Duberstein. Two giants of the technology hardware world, Micron Technology on the NASDAQ MU and Intel on the NASDAQ INTC, find themselves out of favor with investors today, with each tech stalwart currently trading at a bargain basement valuation. This may seem counterintuitive, as the technology sector is booming right now, and with the advent of artificial intelligence, cloud computing, 5G, and the Internet of Things, it seems unlikely that these large semiconductor companies, both of which play into these big trends, could be such bargains today. For contrarian value investors looking for cheap stocks in an otherwise frothy market, both companies should be at the top of your watch list, but to discern which is the better buy, investors need to understand the reasons for their recent declines and whether a turnaround may be in fact in the cards. So obviously there's some relevant list here right there. The market data's Micron's headwinds. The Intel and Micron have each traded lower for different reasons this year. For Micron, it is by and large a price taker for its DRAM, memory, and NAND flash storage products, which are commodity-like components found in all electrical devices. Thus, no matter how much demand there is, if the major memory producers all overproduce, prices can crash, and Micron's earnings can be hurt. Micron has been actually in a downturn ever since the U.S.-China trade war broke out in mid-2018. The oversupply looked like it was turning around to a more balanced market earlier in 2019. Then COVID-19 hit, while Micron then experienced a demand surge. In the first half of the year, management had recently noted that its November quarter could come in a bit lighter than expected as customers digest their big first half purchase. I wonder if the new Xbox doesn't help that. Thus, Micron's upcycle looks to have been delayed for a couple of quarters as investors grapple with the prospect of another fall in memory prices. No, I thought they were using some sort of Intel-based chip, something of the sort, in their new Xbox. Intel's problems, though Intel's processor sales are somewhat sensitive to the same elements as Micron's memory chips. Intel's processor contain more proprietary chip design and thus are not as vulnerable to severe average selling price swings. It has traditionally made Intel's earnings much more stable, enabling Intel to pay out a dividend that now yields 2.7%. None of that's probably 2.7% annually. Like Micron, Intel has a strong first half of the year, but it also guided to some incremental weaknesses in the second half as buyers digest first half chip purchases. However, the reason for Intel's 20% plus drop during July wasn't merely the weaker second half of guidance, but rather the announcement that its upcoming 7nm chip will be delayed about 12 months, relatively the company's initial target. Intel now envisions its first 7nm chip production shipments by late 2020 or early 2023. So, this would be good for the stock around 2022, 2023, having new chip technology out in the marketplace. Obviously, you can see good health for the stock itself. INTC. Hopefully. We would only think. Again, I'm not a financial advisor, so you have to do your own research. You only do what's most comfortable to your own decisions. Intel has already surrendered the leading edge CPUs to advanced micro devices, AMD, in late 2018 when it and a manufacturing partner, Taiwan Semiconductor Manufacturing, TSM, were able to get ahead of Intel, which has made its own internal manufacturing fabs in the race to its 7nm chip, equivalent to Intel's 10nm. So again, that's a drawback. Rather than, still could be priced health for the stock in 2022, 2023, but not with competition when you got 10nm chips from other companies. Now it looks as if AMD/TSM's lead over Intel will be widening in the next couple of years. Taiwan Semi already expects to be producing 5nm chips equivalent to the Intel 7nm chip before the end of this year, 2 years ahead of Intel's new schedule. So that really sucks for Intel. So both are trading at bargain basement valuations, as both Intel and Micron have lagged the overall market and tech sector this year. It isn't because they're expensive heading in. In fact, both companies are trading at extremely low valuations. So, though Micron is cheaper than Intel in a price to book value, Intel is cheaper on an earnings basis based on next year's average expectations. On the other hand, Micron is forecast to improve upon this year as the memory cycle improves next year, whereas Intel's earnings power is forecast to erode next year. Leaning toward Micron, so some long-term investors might see that as an opportunity to buy further on if there's more declines for the long haul, a 5-year, 10-year. Leaning toward Micron, pick between picking value stock opportunities and avoiding value traps is to figure out if a business is in a cyclical short-term or secular long-term decline. For Intel, I'm just not sure if it can pivot quickly enough to catch up to AMD over the next few years. Yeah, I was thinking about just the same thing. Intel is going to be kind of on a constant decline based on emerging competition in other markets, semiconductor and chip producers. If not, Intel could lose a lot of market share, not only in PCs, but also in the all-important data center, where Intel currently has a massive 90% plus market share. Thus, if AMD can maintain its lead, Intel could see that the share of the data center processor market plunge, its revenue and profits along with it. So it's risky, yeah. On the other hand, I expect Micron's current minimal earnings to improve over the next few years in reaction to the second half air pocket in demand. It was recently reported that the large DRAM manufacturers are all pulling back on capital expenditures in 2020, the second year in a row that's happened. Suppliers pull back on new production and demand rebounds due to DRAM heavy 5G phones, AI servers, and increased industrial and automotive chip content. I expect 2021 to be a better year for Micron than it will be for Intel, as the latter struggles to regain its footing against AMD, since Micron is dealing with a cyclical problem and Intel could be dealing with a secular one. Micron seems like the better bounce back candidate to me right now. Not to me, but to this writer. So, that's this article right there from the Motley Fool. Better buy Micron Technology versus Intel. That's all I got for today. On the news side, again, I'll have all these articles on the playback, and you can read through them yourself. Again, do your own due diligence. Do what's comfortable for you and take caution in all markets. I'll be back next Sunday on blockchain tech and finance news for the weekly news that I found interesting for cryptocurrency, blockchain, and financial and stock technology, etc. news. If you're on the YouTube side, please do subscribe, smash like. Cheers, ciao, peace be with you. Stay well, stay safe.